Welcome to TradeTheMBI.com. This is John. This report is for the 18th, and well, look at that. So we had a little softening here in the shakeout indicator. We had a little bit of short weakness, but it was on a reset of the steel, which once it moved back above the 13.5, which is exactly what it did at the start of the morning, going into this little boost. We weren't expecting a huge move, but then you ended up with the tax bill. Getting the AOK from everyone, and that cleared the way, and sure enough that was just a huge move back in with short-term, mid-term buyers, and it caused an immediate reduction in the orange levels. It was right in line with continuation, breaking it to the new highs. I mean, I think it finalized, yeah, we had an X hawk and a iron hawk that were both going, well, this one from way back, but it added to it. But the reality is, if you carried those as separate trades, they would definitely have been well, all the way at the peak. So not too shabby, that's all we can say. And you know, here we are up another 9 points in the pre-market here. Going forward, we're going to be at the 2,700 plus very quickly. The NASDAQ finally breaking out, and that really became a catalyst just driving everything. It's been in a steady shakeout rise here, going all the way through. It had been weaker than the S&P, the ES contract there, and well, this catches it up and actually puts it over. That's still a very funky looking DOC reading right there, but you're right at a point where the sign at minus 334 versus the red there. So you have cyan under red, and that is the bullish indication. Sometimes you have to read the actual numbers because it gets too tiny right there. A little overbought within this initial move, so it could be a little bit too much exuberance. The euro is still maintaining height, which is just crazy given all the numbers coming through from the EU are weak in relation to the almost, 4% the New York Fed is saying that the U.S. economy is growing at the current rate. So we can expect, I would think, some kind of movement on rates very shortly. You see bonds still crazed, and oil holding on to that, which means that we're probably going to see oil maintain this, because it's going to indicate that with that kind of growth rate, that there is a significant amount of use that is directly proportionate to economic growth, and that has been the stumbling block for oil for a long time, despite the huge supply issues that are now available with shale and everything else. But still, those intermittent supply fluctuations sort of been worked out now, and I think you're going to see a steady increase that will be demand related, which is really what we've been looking for quite some time. And gold is going to continue to struggle. This isn't going to produce a whole lot. I think that we've talked about this move into the cryptocurrencies. Here we've had our lovely buy signals from the futures of Bitcoin, and you can see that as we've come up, whenever we've gotten overbought, we ended up with a nice buy setup that developed right down here in that, oh geez, what is it, 17,900 range, and then it spiked up to reached over 20,000 before hitting an immediate short height right there, right up about this level, the 18,500 range, and then retraced all the way back down before producing a new setup right back in the shakeout, rising back up over that 50% level. So regain most of that fade to fill in the gap, because that's usually what happens when you get these large moves, fills in the gap and then moves itself right back. And so that's put a lot of pressure on gold buying. However, the intrinsic value of gold, and as governments get more involved with the cryptocurrency, which inevitably they're going to, you'll probably have a return back to the physical asset as opposed to an electronic one. So let's look at what happens when you get the go-ahead for major tax reform. Buy signal came way down here at the bottom, 2655 range again, after we had that nice run up. We had a beautiful little retrace that was nice and easy to follow and take off, and really almost got to a 50% retrace right back over here at the end of the day, only to continue towards the peak at the end of the day, and this is just a continuation of that. So just beautiful chart. I don't even think, I mean, yes, we ended up with a few peak moves, All of them corresponded to huge resets for short-term buyers on the steel, and maintaining that beautiful cyan under red, even when it gets to the peak levels, which gave you an indication that those wouldn't be much of a drops. Was a little bit less so right here, where we ended up with a little bit more, where you actually had a DOC spread, and that's the one that led to the 50% retrace. So it's always worth noting that one when you get that cyan that moves above the red. At the same time, you have the orange popping above 13, gives you that double-edged Q plus the breakdown of the shakeout, particularly getting underneath that 15 really sort of helps, especially if you've been over the 25, which is that magenta line up here. That's super overbought, and we know that that rarely can sustain itself for extended periods. It can go for a little while, and it did. It went for mid-portion of the day here and kept elevating because you keep having that cyan underneath, but it was once you had the DOC spread. You got a little bit more of a pullback, but it wasn't a lot, and then it just took off again. So, all in all, nice action. And now that we're at these levels, we're going to be looking at 27 plus. Doesn't mean it's not going to have some fluctuation in between going to it, but once you reach the 90 level, that pull towards the 26.98 range, and then you fight it out as you get towards 27. May have used a little bit too much of this catalyst. I think they'll probably wait until the actual vote happens, and that would be enough to drive it. But of course, usually you want to start to think about selling the news when you've had this kind of a run. So bear that in mind, as Tuesday's vote, I think, is what they're scheduling for. I know there was some question whether all the people will be available to vote. I think McCain was headed back because of his cancer thing. So it could still be very tight. So there's going to be some people on pins and needles on it for a little bit longer, but certainly going to drive some major economic growth going into the new year. And I think that's really what the market is pricing in here. This is that multiple I was talking to you about, and given the general construct, I think that you just have to expect that the bias is still to the long side. But I think that as we get into some of these bigger numbers, 27.50 on the ES, and that then you're going to start to see some more soft pullbacks. And I think that will be healthy. So that's the long and the short of it for now. As always, though, if relevant charts pop up, I will post them. Trade well.